Good morning, everybody. Good morning. Ed Ponsi here, your FX educator, here on behalf of FX Street once again. Great to be back again. Hope you're doing well. Welcome to the show. The first session of two today, two 30-minute sessions for your enjoyment. Please do feel free to ask questions. It is Tuesday, October 17th. And there's a lot going on, so we're going to get right into it. But if you do have any questions regarding technical, fundamental, risk management, maybe there's a particular currency pair that you'd like to take a look at, please feel free, let me know. That's why I'm here, to try to help. I'll take my best shot at it. So please feel free, go right ahead. Just taking a look at the very short-term chart here, 5-minute on British pound. We had our little short-term plunge yesterday, and we grabbed a quick 20 pips off of that yesterday live here in the room, but got out of it quick, and boy, am I glad that I did, right? Because really, it never really did do much after that. I'll show you. There was a quick... I go back to our little, this is our session yesterday. There was a quick 50 pip drop, and we figured it's a knee-jerk reaction, so we grab a quick 20, 25 pips right here. We jump out. It did go up a little bit higher afterward, but, we didn't want to stick around too long, and look what happens after a while. It drops right back down, and it's dropping farther today. And what is going on? Right. First of all, comments from Carney. Carney's the head of the Bank of England. He's Canadian, by the way. Yes, there's a Canadian running the Bank of England, and the Bank of England is twice as old as Canada. But ponder that one for a while, right? But Mr. Carney said that a rate hike might be appropriate, and I guess analysts and traders were looking for stronger language. They just weren't too impressed with that might be appropriate, in coming months is what Carney said. And that sort of took the pound down. They're saying, what's this might be appropriate stuff? We want to hear something a little more certainty, right? And so he also said that UK business investment growth has been very soft. So Carney unimpressed with UK business investment growth. UK government. So Carney saying some things that took the pound down today. Rate hike in coming months may be appropriate. The market says, what? We were hoping for more. And market very unimpressed with that. The other issue today that's bringing the pound, might be shaking things up with the pound a little bit here, has to do with Brexit. Of course, we know that Prime Minister Theresa May is, went over to Brussels and is involved in the negotiation process. The UK government said that the final bill is to be decided until all the details are worked out. Also, the UK Foreign Secretary, Boris, said, we're not paying 100 billion euros. It's a negotiation, gang. Don't get too upset. Who knows what's going to shake out in the end. But anyway, these comments may have taken the pound down a bit more, because they make it less likely that a deal, they're not really, it's not really a conciliatory tone. It doesn't really lead people to believe that a deal is going to happen in the near term, but that's how you negotiate. You don't negotiate by saying, hey, everything's wonderful. You negotiate by saying, we don't like this and we don't like that, and you try to get the other side to move, and that's what the UK is doing here. The UK is trying to get the European side to move, and the European side hasn't really moved too much from what I can tell, and we'll see if the European side does move. Okay, so and yeah, we'll see what happens, but in the meantime, we are under 132 on the pound, so now you know why. Let's take a look at the bigger picture. All right, and we said this was a support level from earlier, and we're kind of breaking through that area now. Pull that down to a 60-minute. I think that support area might be pretty much violated at this point. Yeah, this support's gone. We can get rid of this line now. This one, we could still say there's still something here. You see how this line here, this is support and resistance. That's 133.50 approximately. That looks like your most important level at this point is about 133.50. In the short run, well, that leads back to late September. Around 133.50 or so. So that's a number that we'll keep our eye on if and when it gets back there. So some levels come and go, some break, some remain, right? And this is the one that seems to be the most important in the short run right now. Now weekly, let's push way back, try to get a feel, and I think you'd have to say that on a weekly, we are trending higher. British pound's been trending higher pretty much all year. That dovetails nicely with what's been happening with the dollar, which has been trending down all year, right? So not a big shock there, right? Not a big surprise, I think we'd have to say, based on what the dollar has been doing all year. Here's the dollar chart, $DXY, and dollar's been down. Look at this. This is where 2017 begins. Right here, that's where the downtrend begins. So if the dollar's been weak all year, pound's been strong all year, not that unusual, right? It should not come as a huge surprise. So based on this chart, you'd have to say, like, long term, this is bullish. Excuse me for just one moment. Okay, just one moment. So, okay, so you'd have to say that's a fairly bullish chart. So this 133.50 should act as resistance, and your buy point comes a bit lower, right? If you're thinking in terms of that trend line, your buy point's going to come a bit lower. Where is that trend line numerically speaking? It's around 130. I'd say 130.75 right now, today. Tomorrow it'll be a little bit higher, right? Every day it's a little bit higher. So unless the pound really falls hard today, falls another 100 pips today, I don't think it's going to get any help from that trend line. It has to fall at least another 100 pips today to get any help at all from that trend line. Okay. Shorter term, there might be some support. I think we saw a little bounce on probably visible on the 4-hour. You saw a little bounce here. What do they call these railroad tracks? Price came down, found a buyer down here. Found a buyer somewhere around 131.40 to 131.20 area, and we're rapidly heading in that direction again. So we might find we might find some support, a good 40 or 50 pips down from here in the shorter term. So overall, right, long term, it is bullish. You can even see it on the 240 minute. See how it's bullish on the long term? And short term, this is bearish, but longer term, it's bullish. So I like to hitch my wagon to the longer term and think of it in those terms. Now, that said, British pound is not going to be for the faint of heart, and I would think that in any type of trades that you do in this are going to be short-term oriented, because of all the drama that's unfolding right now with Brexit and you know, today's Tuesday, and there's an awful lot going on with Brexit this week. There's a lot. It's even on you. You can even see it on the calendar. I think it's on Friday. And I can't find it. Okay. All right. Well, anyway, we know there's a lot going on this week with Brexit. There's basically, it's an ongoing negotiation. So, you know, so you can't be too careful right now. There's an awful lot going on with Spain as well, and Spain took the unfortunate step last night of actually taking political prisoners in Catalonia, and I'm not sure. So the European Union is now resorted to taking political prisoners. I don't know. I mean, there's an awful lot, you know, going on. I don't know how all of that's going to shake out either. Go to Euro USD. See, there's just so much political news swirling around the British pound and the euro right now. It's not going to be for the faint of heart, and it could be dangerous trading, right? So in situations like these, either don't trade them or just don't stick around in them too long, right? Now, remember, we laid out what we called a flag pattern yesterday for euro. That flag fell apart. If the price just keeps drooping downward, then it's no longer a flag, and that's what's happening. It hit our resistance level at 118.50, and it's just slouched all the way back to 117.50. That's no longer a flag. It's halfway back down to support at this point. So, yeah, but they took two of the Catalonian independence leaders and threw them in jail, and it sort of makes you wonder, you know, what type of organization they're running over there in Spain and with the European Union in general. if they're going to start taking political prisoners and say, well, we disagree with you, so we're going to throw you in jail. That's just wonderful. That's just wonderful. Okay. Unbelievable. You know. And not only that, but that's how you make heroes out of people. And you know, it reminds me of Nelson Mandela, right? So, you know, good luck, Spain. You're doing everything wrong. Good luck. All right, let's go to some other charts. I want to go to the S&P. All-time highs again, and bidding higher. Actually, bidding kind of flat this morning, sorry. But all-time highs again yesterday. What else is new? 61 all-time highs for the NASDAQ so far this year. And, you know, just want to remind you that Nobel Prize-winning economist Paul Krugman said that when Donald Trump was elected, that the stock market would never recover. Since then, 61 all-time highs for the NASDAQ. Just let that one sink in. He's got the Nobel Prize. Okay. All right. So this continues to go higher, right? And we looked at copper yesterday, right? HG, Dr. Copper coming off a little bit today after hitting 3-year highs yesterday. Dr. Copper screaming global economic health, right? But why do they call it Dr. Copper? Because it's a metal that goes into the construction of everything, right? And if copper is doing well, that means the global economy is probably doing well. It means buildings are probably going up because every building has to be wired with copper. It means, you know, that in general, in general, construction is occurring, manufacturing is occurring. All these things require copper. And so that's why they call it Dr. Copper. If copper's going up, then good things are probably happening. And look at that chart. That chart says good things are probably happening with copper, right? And probably centering around China, right? Let's take a look at gold. Gold, definitely a little bit of a disappointing turn for gold bugs as we're back under 13, it would appear. Hold on one second. Make sure that's correct before I throw that number out there. Yeah, that does appear to be correct. We're getting out of that channel, right? We popped out of that channel there, and the one thing I always want to make clear is, you know, just because we escape that bearish channel doesn't mean we are now in bullish mode. It could mean that we're in bullish mode. It could mean that we're going to go sideways. Or it could mean that we had a short-term bullish episode and now we're going to go back into bearish mode. So, you know, just keep in mind that anything can happen. And right now, we are back under 13 on gold. Okay? Now, that's bad news for Aussie. But, of course, the copper is good news. It's bad news for Canada. Canada, of course, is home of oil. Oil's creeping out of this ascending triangle. To a lesser degree, you could say what's true for copper is also true for oil. You know, those factories around the world start pumping out more goods. A lot of those factories run on oil, and that's usually a positive sign. Like a strong global economy often means that more oil is going to be consumed. Of course, Oil still has major, major, major resistance at 54. Remember, this is not Brent crude, this is WTI. That's 54 and a half, I should say. 54.5 is where the big resistance is. We're at 52. So this has a lot to prove still, but we have been climbing since late June, I should say. Sorry about that. Since late June, we have been climbing. So can't deny that there's something going on here. But I'm very interested to see what happens if and when crude oil reaches 54. This should be good news for Canada, but Canadian dollar can't seem to get it moving. We drew in that sort of inverse head and shoulders yesterday. I would say it's really an incomplete inverse head and shoulders. That right shoulder isn't really completed yet, so I'm not too excited about it just yet, but you can see where it could be happening. But I would just be careful. Like, I wouldn't dive in just yet. I'd say that right shoulder isn't. I'll even take that right shoulder off. I would say that right shoulder is not complete, but I would say that you definitely do have a left shoulder and a head, but the right shoulder is not yet complete, and we're just drifting sideways at this point. Okay, but we have had a nice little run since mid-September off the lows. And, it's a little bit, you've got strength against strength here. Commodities have been stronger, but the dollar has been stronger in September, so it's been a little bit tougher. You can see that September strength there for the dollar reflected in this chart, right? So this one to me looks like we took a shot at this, but we're saying, hey, it's kind of no man's land right now. Let's let it be. Dollar yen still within this sideways sort of. It's very much within this. Whoops, I don't want that. It's very much within this sideways, trapped within this sideways pattern. If it can get above 114, it's a short, right? Because there's huge resistance above 114. If it can get down to close to 108, it's a buy. And in the middle, it's no man's land. And we've been bouncing back and forth like this for 6 months. The one thing that's very interesting to me, dollar yen, people are asking, why is this not trending with the market, with the stock market? There's a really good question, because we know that dollar yen conforms to the stock market sometimes, and other times it bears no relation to stocks at all. I'm going to explain this, and this is something that most people are never going to understand. But I'm sure you can understand it if I explain it to you the right way. It's simply this. When stocks are falling, dollar yen is going to correspond very closely to the stock market. But when stocks are rising, there's going to be very little relationship. See if I can find a, let's see, UUP. No, stocks would be SPY. I'm going to go out on a limb here, gang. The weekly, that's stocks. I'm using an ETF now, and I'm going to insert an ETF for the Japanese yen, FXY. Yeah, it's not going to work on this. Um, I'll show you. I have a different way to show you. Let's take a look at the stock market crash, 2008. See that crash? By the way, look where we are now. This was 2008 crash. Okay, when we're falling, that means interest rates are probably going to be cut. Japan keeps interest rates at zero or close to zero at all times. So think about carry trades. At the same time that stock markets are falling, carry trades are going to be unwound. So as the stock market falls, the yen gets stronger. Why is the yen getting stronger? They're buying the yen not because they like the yen. They're buying the yen because they're short the yen and they have on carry trades and they have to cover. So as the stock market crashes in 2008, they're covering the short on euro yen. And they're covering the short on Aussie yen. Why? Is it because they like the yen? No. They've been shorting the yen for years on carry trades, and now they know Australia's going to cut rates because the whole global economy is going to cut rates, right? So they're covering their short on Japanese yen. So how do you cover a short? You cover a short by buying. There's no other way to cover a short except by buying. It's the only way. All right? It's 2008. The stock market crashes. New Zealand yen crashes right with it. Do they love the yen here? No. They're covering their short on the Japanese yen because they know New Zealand has to cut rates. Japan's not going to cut rates. They already have a zero rate. Or virtually zero. Right? And that's why the yen gets stronger when the stock market falls. But when the stock market rises, there's no corresponding action to this. When the stock market's falling, they're all buying yen to cover shorts. When the stock market is falling, when the stock market is rising, there's no corresponding action. You could say that, well, when the stock market's rising, everybody's raising interest rates. Okay, but the stock market's been rising for years, right? And everybody's not raising interest rates. Not yet. They're talking about it, some of them, but they're not. So that's the relationship between the yen and the markets explained. When markets are falling, the relationship is strong. When markets are rising, the relationship is not strong. It falls apart, like now. There's very little relationship between this chart and what's happening to dollar yen or euro yen or pound yen right now. It has very little to do with this chart. But if this chart starts to fall, you might begin to see a much stronger relationship. Okay? I hope that explains it. Okay, that's going to do it for me. I hope you enjoyed listening. This has been Ed Ponsi, your FX educator, here on behalf of FX Street. I'll speak to you again in about 30 minutes. Thank you for listening.